basically, let's take a look at what we expect for credit unions then for the next year. Take a look at a credit union balance sheet here. On the left, we have assets. On the right, we have liabilities and capital. Remember that old accounting identity we all learned in accounting class, that assets must equal liabilities and capital. So on the left side, and assets must equal what's going to come on the right side. Let's first talk about deposits. This is the big liquidity risk we're all talking about. Checking, savings, money markets, those first three core deposits. We saw we're kind of losing deposits there. And then CDs, the last one. What do we forecast for credit union savings growth? Well, notice last year we had the weakest credit union savings growth in history. It only grew by 1.6%, the box for 2023. The bar for 2024, this year we're forecasting 3%. And the reason we're getting that 3% growth, a lot of it is just due to the self-funding of credit unions, that we're just paying higher interest on the accounts, which is making the accounts grow. But it's going to be another weak year of 3%. Notice my line kind of shows the long run average of about 6.6% is the long run growth rate. And you always want to keep your credit union growing. You want to keep getting bigger and bigger. And at 6.6 is the long run average. Next year for 2025, it's going to be better, but still below long-term trend. About a 5% growth in savings next year, still below that 6.6%. What about borrowings? Another way we can fund ourselves, another source of money, is with borrowings, either calling up the Federal Home Loan Bank, the corporate line of credit, Fed funds purchase, and we used to have that bank term funding program. It has now, this is borrowing from the Federal Reserve that was created right after Silicon Valley Bank failed. That window is now shut down, but a lot of credit unions did borrow from it before. What's been taking place with borrowings at credit unions? Take a look at this chart. Talk about a shocking chart. Credit union borrowing growth rate, so this is an annualized pace. Look around 2022, 2023, we were growing about 160% growth in borrowings at credit unions because we weren't getting the deposits in, so we were relying more on borrowings to keep growing our balance sheet. Notice recently, though, in 2024, we're kind of getting down to zero. So it seems like the worst is behind us when it comes to deposit growth. Deposits are starting to grow again, and credit unions are relying less on borrowings. Moving on, what about equity? This is kind of your undivided earnings, your regular reserves, those first ones we call net worth. And if you add that third one in, those gains or losses on the available for sale securities, basically what's been taking place with that gold one? What kind of losses have we seen our investment portfolio because of the increase in interest rates?